Please start the PowerPoint. Yeah. Thank you, Dipti, and welcome all to Vaibhav Global's Investor Meet for 2020-21. It is my pleasure to interact with all of you. To start, I would want to share our company's vision, mission, and core values. Now, these are statements that are not just the plaques on the walls of our buildings, but we really live these. Our vision, whatever business we do, we stay true to our vision of being the value leader in electronic retailing of jewelry and lifestyle products in the markets that we deal in. Our mission is through the delivery of high quality, affordable products made possible by our low cost direct sourcing, we change the world and touch people's lives one piece at a time. This statement was designed to encompass our one for one program that is dear to our heart, our value position in market, and high quality, and vertical business model. Our core values are very dear to us. Teamwork, honesty, passion, positive attitude, and commitment. These values are, again, not just words, but we hire people, we promote people, if needed, we exit people based on these core values. Next. This is our business model in a very small nutshell. We have direct market access in US and UK to their large customer base. And as you would see, we have 425,000 customers on trailing 12-month basis as of June 2020. This was 23% up year over year. From those customers, our volume for the financial year was 4% up year over year, and for the quarter was 39% up year over year. Our product range, fashion jewelry, fashion accessories, lifestyle products like scarves, handbags, home accessories, and recently added some essential products like vitamins, masks, fashion masks, and all those necessary at these times. We have omni-channel presence in almost 100 million homes in US and UK through website, through our mobile app, through browser, and through social media, as well as marketplaces. And then our model is also comprising of our own in-house brands. We don't go aggressively on outside brands because the margin target that we have, minimum 60%, is sometimes difficult in outside brands. So we follow a strategy of developing maximum in-house brands, somewhat similar to Zara in Inditex model. Adjacent category means we'll go into adjacent categories to our product that we already are expert in or good in, and then we test those out. And then try to expand wallet share of the customer by selling the adjacent categories and also offering our product to customer through many different channels that she frequents to. Next slide. These are numbers many of you might have seen in our last earning call, but nevertheless, these numbers are here again. Financial year 2020, we had a growth of 15% on top line revenue and 23% of PAT. In Q1, we had a growth of 32% in revenue and 47% in PAT. Operating cash flows have been robust and free cash flow have also been very robust. Sales volumes, I mentioned the numbers earlier, but as you will see in Q1, unique customers on trailing 12 months basis is 425,921. ROCE and ROE, Vineet will talk more on these, but they have been very robust and continue to improve year over year. Next slide. This is our framework that we manage our business in. We call it 4Rs. And this is our in-house developed framework. No consultant has given this framework to us, but over the years we saw that these numbers make a difference for our business, and we track them on daily, weekly, monthly basis. So first is our reach. Reach via television, and television also has three components: linear television through cable, satellite, and telcos. OTA, that's through antenna, and OTT is through streaming on smart television. Web is very fast growing and very widely growing through browser, through mobile apps, through social medias, marketplaces, and we are very excited in this space. On television, cable or OTA, we have reached 100 million homes between two markets. OTT is wide reach, but still is very nascent stage. Web is ubiquitous in these two markets, and we are going wider and wider through social media and marketplaces. Second is our registration. Registration is about new customer acquisition. We track it on an hourly basis. Every product, every event has to make sure that it meets the number of new customer acquisition. Every email, every e-com tactics or campaign is looked at from new customer acquisition point of view. And we are rapidly increasing our new customer acquisition ratio, as you saw earlier. The third R is retention. Once we acquire that customer, how many of them we retain year over year? And this number is increasing. Only in Q1, this number as a percentage decreased slightly because we acquired a lot more of new customer due to pandemic. There was one-time event, and this will be actually quite good for us because those customers will become, and many have become our long-time customer, and more we have strategies in place to make them a long-time customer. And fourth R is repeat purchase. Once we retain the customer, how many pieces can we sell to her on a yearly basis? Last year it was 27 pieces per customer per year on an average. Next slide. Now this will give you some breakdown of our business transition, how it is transitioning from geographies, from product, from budget pay and sales channel. First is US and UK, which is pretty steady over last 4 years. So the light blue is UK and dark blue is US. And when you saw the slight increase in UK versus US, it is more to do our own in-house execution, but the customer demographic in both the countries is pretty similar. Product categories, as you would see, non-jewelry is rapidly increasing, owing to the customer acquiring or customer asking for those products. So we decide, not preconditioned, that this is what we'll sell. We have some guidance, but we let customer decide based on our own criteria of productivity per minute, per hour, what product we will present more, what airtime or what website space more will give to a certain category or product. Budget pay is EMI based selling. So currently we are about 39-40%. Q1 was anomaly because of a lot of lifestyle products coming in. Essential product coming in. Q2 we have seen essentials again coming down quite substantially. At Q1 it was around 17% essential. Now we are running about 5 to 7% essentials right now, even at elevated response rate. But budget pay currently is around 39 to 40%. Sales channel, as you see, the web revenue has continued to expand rapidly for us. So it's 37% in Q1 FY21 was web and 63% was television. As you will see later in our guidance, our web guidance is much faster than our overall business growth guidance. Next slide. This is the first section is about the economy. The light blue bars are the US retail sales in dollar trillions. And the line bar is e-com as a percentage of total sales. As you will see, the e-com sales have been rapidly increasing in US and same in UK. Actually, UK e-com is much higher as a percentage of sale than US. But the growth rate in both markets are very high for e-com sales. And that plays very well for our business model. In Q1, as you see, the e-com growth has been pretty robust and the growth curve has really grown rapidly. In VGL, which is the last one you would see, our web sales growth rate has been about 30% CAGR over the last 4 years. Now, they're cord cutting in the US. So the linear cable, there has been cord cutting in US largely, not so much in UK, but US largely. Because UK, already about 60% homes are in OTA, that is free to air through Freeview or FreeSat. So I'll concentrate therefore in only US for the cord cutting phenomenon. So the first graph you would see, in 2013, the 83% of homes had cable, which in 2019 was only 64%. That means the 19% homes cut the cable or they stopped paying for their cable subscription. They either cut the cord completely or they migrated over to the streaming. Our demographic that we deal in, you'll see later what is our demographic. Our demographic is Gen X or baby boomers, which is 45 plus. And those demographic cut cord only 5% over these six years period. So the cord cutting phenomenon on our demographic is very slow. On the other hand, the OTA, over the air, where they don't pay anything, they buy any television set which has built-in antenna or on the side television or on the roof antenna, those numbers have increased noticeably. As you would see, the households in 2013, the second graph, were 13.5 million in OTA, which is now 19.1 million in 2019. And Shop LCs, which is our subsidiary, our penetration was less than 1 million in 2013, is now at 14.4 million homes in 2020. So we are rapidly increasing in this space. So I'm sorry, this is 2013 versus 2020, not 19. Number three, third graph, our platform in US is consisting of all these 5 reaches in addition to the linear television, which is over the top, that is streaming. We are on pretty much every app, whether it is Amazon Fire or Apple or Roku or Hulu or all the different smart televisions like LG or Samsung or also different new media that is coming. For example, Comcast or Time Warner, all those applications we are getting. Some of them we are already there, some we are getting very quickly. But that is still in nascent stage. The acquisition of customer over there is still slow. Our revenue for last year was just about $1 million on OTT platform. But we are learning rapidly on that space. We already invested last 3 years ago, and we are investing it every year in that space. Now, next slide is VGL TV revenue. The CAGR on TV revenue has been 8.4%. Now, this is high single-digit growth, which is good, given that there is a cord cutting. So there's for our demographic, there's slight cord cutting. So our revenue growth per home is increasing much higher than what 8.4% would denote. Next slide. I'll give over to Jay, our CTO. Jay.
Thanks, Sunil. Good evening, everyone. Appreciate you all finding time to be for this investors call. And this slide is to kind of show a picture in terms of how technology is partnering with business and enabling the transformation. As you can see, pretty much technology in the middle of everything, empowering as well as enabling the business. As Sunil mentioned, digital is one of our key area in terms of future growth. As you can see that we are enhancing the experience of the customer, both in terms of navigation, UI, UX, as well as creating a platform where customers are confident to be able to transact with us, allowing them to use whatever method of payment they would like to, giving the wallet integration with Amazon, Apple Pay, Google Wallet, we think will have a significant impact on reducing the abandonment rate and improve our conversion. As well as we want to take our RA application, which is one of the popular applications given the price point. We want to take it that to the mass with the viral application, as well as some kind of engagement related loyalty, probably even some gamification. We really think that this will really take us to the new level. And then continuing to enhance our social DR capabilities, creating a micro website to enable the influencer, as well as getting some deep insight to the analytics will help us to where to spend money, where to go deeper, where to kind of reduce the spending with respect to digital marketing. And then moving on to the customer growth, as you mentioned, that as we are seeing our new customer growth really increasing in the last Q1 or so, we think that enabling the AI-based capabilities to really understand and target the customer based on their preferences, give them a treatment that is very personalized will help us to kind of have them come back and retain them, as well as increase their wallet size over a period of time. So IT is investing heavily in the AI-based technology, which we think not only will retain the customer as well as help us to kind of move them from channel to one channel to omni channel, which directly impacts the wallet size, as well as move them from one category to another category, so that they have a lot more reasons to come back to us. And then all of this kind of will make sense only if we're able to continue to improve our delivery capability. So in that area, we are continuing to invest in our warehouse systems, both in terms of figuring out a way to print the invoice in an AI-based manner to be able to get the product to the customer sooner, as well as future plans are in place in terms of creating the system that allows us to be on par with many of the other retailers with respect to robotics, as well as we're seriously looking at kind of replacing our homegrown WMS system, which does a real good job for us with something latest in the market to be able to enable us to use all this robotic capability that has been developed in the last 3 4 years or so. And then kind of this goes along with our manufacturing days as well as product sourcing days in Asia, which is a supply chain. We just completing our ERP rollout. Asia got the ERP implemented in the calendar Q1 of the calendar year. Now we are in the last phase of implementing the channel side. Things are really going fine. We want to take it to post ERP rollout phase in terms of automating processes within the supply chain as well as manufacturing units. Our vision is to really transform into Internet of Things where handled wearables will help the productivity as well as the efficiency of both manufacturing as well as the supply chain unit. As you can see that our market presence is increasing phenomenally beyond TV into digital marketplace, OTT. So we are at a point where we are looking at our existing applications, both OTT and video on demand, renovating them, refreshing them, giving them a new vibe, as well as a lot more penetration into new areas where we didn't exist so far, and continuing to expand our marketplace both in terms of process automation to be able to tackle a new scale as well as penetrate into the new areas of marketplace along with what we already have in place. Another thing we are doing is to increase our product offering, and I think that's where dropship capability is going to be very crucial given the season coming up in terms of holiday, as well as a personalized product is another area where we think that technology can really bring the customer to our website, mobile app, create a product that is very compelling for them and very personalized for them. I really think this combined with our influencer and ambassador program will really take us to the new level, In fact, having potentially could impact our demography in a positive way to create a bigger age range in terms of our demography. All of this kind of taking us to the new possibility of omnichannel marketing instead of having a kind of a targeted digital and non-digital. We're integrating our marketing effort to be able to touch customer in a meaningful way, in a 360 way. So customer knows who they are to a level that there is a smooth transition from one platform to another platform. And this also can lead us to be able to segment the customer in a manner that we can target them next best action, not necessarily next best product or not necessarily next best offer, more around the next best treatment to the customer so that they feel that they are welcomed, they are rewarded, they are recognized. Back to you, Sunil.
Thank you, Jay. Dipti, next slide. So next point about the our people. Now, the people for us is the crucial element for our success so far, and we believe that this will be the foundation of our success in future. We have very open culture all across the organization. I'm and all the senior managers are very accessible to all the employees. We have very diverse workforce, equal employment, equal opportunity employer all across our organizations, and we attract best talent. We have, as you would know, many of you have shared that we have an MBA program that we hire from best institutes in India. We've been doing that for the last 18, 19 years. And all those young people who join us without any experience or with some experience, then we groom them, coach them, train them, and put them across all the different parts of the organizations. Our US and UK heads are a part of that program that we started long time ago. And currently, our China operation, Thailand operation, within India, US, and UK, there are a lot of talent that is developed from that program. We have workforce across 6 different countries. Our training, we give formal training to our people. So average training was 43 hours per employee, which is one of the highest in India, or even in US. We are US and UK. We are ahead of many peers. Our average longevity of employees is pretty long compared to the peers. Women diversity is pretty high, given that the manufacturing area usually women are much lower. Great Place to Work Institute, which is a US institute, has certified our China operation, UK and India, to be great place to work. This is not easy to get. It took us a few years to qualify and to reach there. We are proud for that. And I mentioned already about the management training program. Next. Supply chain, that is our strength. We are aggregator of, we source our rough semi-precious gemstones or synthetic gemstones or metals, the base metal or silver that we make. We still use some gold, less than 5%. All that we aggregate ourselves, designing, manufacturing, and all the transporting, we do ourselves. We process, we curate, and then we retail. So we have end-to-end supply chain, which is very unique for our kind of business. Only comparable that we found was Inditex, that is Zara, which is end-to-end business model from manufacturing, designing, transporting to retailing, and very quick to market. Although they are in brick and mortar and e-com, whereas we are on only digital platforms. And we have our gross margins are pretty robust, and they are very similar to what Inditex does. So our business principle is we'll only go into product that will give us 60% gross margin, and we'll continue to grow that product category only. That is why we don't go to outside brands or to very high-end product that will limit our gross margins. Okay, Dipti, let's go to the video before you go to the COVID. Dipti started a video about GL Group that will give you some overview of the company.
At Vaibhav Global Limited, we see ourselves as a company that markets fashion jewelry, accessories, lifestyle and essential products to consumers in two of the most exciting economies of United States and United Kingdom. Where every unit sold results in a meal provided to a school-going child. Where we have created highly engaged teams, evidenced by 3 of 4 major VGL units being certified as great places to work.
Here we're like a family. A lot of us have been here for years, and when we say Shop LC family, we genuinely mean it.
It gives you the feeling that you belong somewhere and you're part of this great team, which, I don't know, we just deliver joy every day and we bring people together.
I like it because you get unusual things at a very good price, and you can be in fashion, and it doesn't cost very much.
Drawers of them, drawers of silk scarves, and those lovely silk and cashmere scarves with the lace inserts that you've just done were beautiful.
I want to see VGL become a global leader in discount electronic retail of jewelry and lifestyle product all over the world. Thank you, Dipti. Go to the next slide. So during these pandemic times, I would be amiss if you don't share what all your company or VGL has undertaken. So there are two major themes during COVID that would come to our mind. One is inclusion. That means we included everybody into COVID preparation, our frontline worker as well as everybody, and then quick response to whatever situation was, from opportunity point of view or from safety point of view. We responded very, very quickly. And as you would see between the two, the cross of these two is called, we call it exceptional response. Next slide. Now this, we look at all our segments that we look at. The employees, we had a borderless workforce across all different countries. So everybody pitched in during this time. When China was shut down December, January, all the other centers pitched in, applied to our channels. When India was shut down, China came up to the force and supplied the product, Thailand and Bali as well. In US and UK, all our work was continued with complete safety, and even the spaces were cordoned off. In the warehouse, in the studio, everything was cordoned off and created the section with the distances and safety measures in place. During this pandemic, we have not furloughed or reduced any employee, even though in India there was a lockdown for 1.5 months, about 5 weeks. We paid every worker full salaries. Even the contract workers, we paid them salary, which we did not have to. And even after pandemic, once it was done, we gave our increments to our employees across the organization, which very rarely anybody did. But we recognize everybody's work, hard work, and we continue to share the success with them. From investors' point of view, Vineet will share more how we have continued to be very transparent and giving back to investors at every possible opportunity. And cost rationalization also, Vineet will talk about them. There's a focus on reducing the cost during this pandemic. From customers' point of view, continuation of our operation is actually a support to customer, because many of our customers watch us for hours in a day because they are living alone. We are their only live company. We respond to their texts and emails. So we received so many texts and messages from customers appreciating us being there for them and offering our product like masks and sanitizers, vitamins, food items, many necessity items that they do not want to go to the stores to get them. We will get them at their doorsteps. Our call centers were continuously operating. We have distributed call centers in Mexico, Guatemala, US, in Austin, in Atlanta, also in Philippines. And they're all operating. There were sometimes some issues in Mexico, but then other call centers took up the slack and continued to operate. There was zero time on our IT infrastructure. It was very well robustly managed. For TV production, we had backup in case our studios would not be accessible. We didn't have to go to that, but we had created complete backup. Our IT team was really robust in that. From supply chain point of view, I already mentioned how we manage the supply chain. It was very well, very efficiently managed. From community point of view, we distributed about 160,000 masks in US, UK, and India during the time of need. And even today, we continue to offer free masks for customers or institutes who would need them. Recently, as recently as 2 weeks ago, we distributed about 10,000 masks to the local Austin school district. They did not have masks and the schools were reopening, and they had a mandate from Trump administration to open the schools, and they did not have masks and sanitizers. So our team went to the schools, many different schools, district headquarters, the local schools, and distributed about 10,000 masks. And we distributed about 3.4 million meals to migrants and poor community around Akshaya Patra during pandemic. Now I will ask Amit to give some overview of US operation. Amit, over to you.
Thank you, Sunil and Jay. Now, from US side, before actually I start the updates, I will just introduce you with the US office, how it looks like. So you will be able to see the US buildings. So Dipti, if you can play the videos, then I can go for the numbers.
Just please give me a minute and I will share the video.
In the meantime, I can give a background on Amit. Amit joined us, Amit, 18 years ago?
Yeah, almost 16 years, yeah.
16 years.
Yes.
So he joined us in Jaipur 16 years ago. Then he moved to UK, I think about 13 years ago.
Yes.
And then from UK, he was managing director in UK for some time. And then he moved to US just about a year ago as head of US operation.
Dipti, if you're struggling, should we go for presentations? Maybe we can play at the end.
I think that's a good idea.
Yeah.
Dipti, go ahead with the presentation for US if you take time for the video. Okay. Sorry.
Welcome to Shop LC, a 24-hour home shopping channel focusing on jewellery and home goods. We're all about passion, synergy, commitment and teamwork. Come inside with me.
Amit, please mute.
This is where the pre-production happens, and from here, this is where we get the show ready. This is where all the jewelry and all the products are ready for air.
Every day here is an adventure. Time to go to work.
Thank you, Dipti. We can go to US presentation.
Yeah. Thanks, Dipti. So for US side, the revenue wise, in 2016, we were at 128 millions and our web portion was 22%. We have seen actually 9 to 11% growth in last couple of years. And last year, actually, we have seen 13% growth, which was 192 millions. And in Q1, we have seen 20% growth. And we have seen some impact of pandemic, but after that also, even we have seen that our lifestyle contributions and overall revenue has gone up. Now, in last quarter, our overall digital revenue was 40%. PBT in US, we have seen a healthy growth. And last year itself, from 11.8 millions, we went to 19.8 million, which is 68% growth overall. And we have noticed even in Q1, our PBT was 5.5 million, which was 67% growth. And we have seen actually with this growth, with a very good new customer registrations, as well as our volume growth actually was one of the strongest growth at ShopLC. Next slide, please. Now, this is actually what Sunil earlier mentioned about our customer profile. So we have three different kind of customers grouping. So live TV customers. So live TV customers, most of the customers are 60 plus group, which are called baby boomers. And they spend average 120 minutes every single day. And also average purchase, they make it 28 times in a year. And last year it was around 32. Recently, we have seen actually with a lot of new customer acquisitions, that number has slightly gone down, but that is actually mostly the new customer acquisitions. Lifetime value of each customer on TV is 482. And most of the customers, they are very value conscious, retired, raised in a gemstone era, value appearance, and financially very intelligent. They are very value savvy, and that's why they are always watching it. If we offer any good values, they're always appreciated. Now we have online customer, which is a very different group, which is like sort of millennials and Gen X. So age group is 40 to 60. And we are seeing constantly that a lot of young demographic, especially on the online, is improving every single week. Locations mostly Texas, Florida. Online visits per year is 150 and purchase per year is 33. Lifetime value is $213. And most of the customers are savvy online shopper that is engaged in social media, is incredibly very well informed and will research items before spending. And the last customer group, which is actually 45 plus age group, which is mostly lives in the cities like New York. And the average time they spend it is 150. Quantity per year is 110. So that is the omni-channel customers. The customer who started with the TV or web, and then later on they migrated to multi different platforms. And that is the customer actually we are constantly growing very well. And their lifetime value is $4,974. They are a very bargain hunter, shopper that purchase on any platform as long as they're getting the value, and is a little more carefree with her budget, but value sincerely. And there is a huge engagement from this customers group. And that is the customer group also, which promotes us in, with a lot of other customers as well. And we get the reference out of them. The next slide, please. So now at ShopLC, we give the customers the facility to reach and watch us on different platforms. So as Sunil mentioned earlier, a traditional linear TV, which is around 75 million homes. And we have live streaming on apps, which is, of course, shoplc.com website, which is growing very well. Google Play, App Stores, Amazon, Walmart, eBay, Instagram, and Facebook. And at the same time, we have launched also an Android TV, Amazon Fire TV, Roku TV, YouTube, and Apple TV. And the platform actually which we used it is Pimcore Digitals. And for our targeting marketings and emails, we use IBM and Unica. And for influencer marketing, which we are recently upgrading that platforms, we are using Pixel and TV Page. Hit the next slide, please. Now, this is how actually our customers. So Sunil talked about 4R. So I will just cover actually in 4R areas how we reach to the customers. So on the web platforms, web TV, where we are actually recently started giving shipping and handling promotions. So every customer who shop on the ShopLC website at $49, they get free shipping cap. And we are seeing actually customer response has gone up since we made the change. Also at the same time, Amazon sign-ins, and the same customer actually which is coming on the web, we are also going very aggressively on the Rising Auctions app. So Rising Auction actually is a platform where customer can bid on the items starting from $1. every single piece is available starting from $1. And then later on, they bid against each other. So it gives them a lot of value and also very engaging platforms. And we are actually further upgrading the platforms. And in wallets, we are also giving customers now in coming months the options of Amazon Pay and Google Pays. Influencer is the one new area which we recently started since January this year. And we have seen a very good attractions, and you will see in the next slide the information about influencers. On TV, we are actually going very aggressively on lower channel positions, and we are expanding our careers and simulcast. So recently also we have added Nextstars platforms, which is actually a very big platforms, and we'll start seeing the impact of that one in coming quarters. The marketplace is the one area where actually we are going very aggressively and we are seeing very healthy growth. We have some transitions from marketplace to our main business, but we are constantly reviewing it, that how we can further migrate customers from marketplace to our main business. Social DR actually is a very new initiative, but what is interesting about social DR, the customers which are coming through social DR on our website, we are seeing a huge engagement of those customers going on a different web page and buying some other items as well. So effectively, every single social DR customers which are coming to ShopLC website, they are actually remaining the customer at ShopLC. So this is a very impactful area. And one of the key difference between for social DR for ShopLC and other companies, most of the social DR companies, they are operating from Far East countries. We are one of the few companies actually, in spite of with our vertical integration model, we are actually operating from Texas, and that is the one message which is going to the customers, and that's creating a positive impact. And also we have Refer a Friend, which is mostly for brand awareness and power user marketings. Can you go next slide, please? Now, this is the influencer area where you can see what we do is team. They're contacting every day 20 to 30 new influencers, where these influencers actually has a very good fan followings on different platforms, where they get the product and packet from our side, and at the same time, as per their choice, and they write about that product actually onto different Instagrams or different social media platforms. And what we are seeing actually, that we are getting some reasonably good new customer acquisitions in last couple of months. But most important, actually, we contracted 400 influencers just in last 3 months. And as we are seeing number of influencers are going up, we are expecting our new customer acquisitions will become very strong. So our goal is to acquire 5,000 new customers this year just through influencer program. We're also focusing on the micro influencers. So micro influencers are the influencers actually, which they don't have a huge fan followings. They have very 10,000 to 20,000 customers or people are following them. And the impact of those influencers is a lot more higher as compared to very big influencers. Ambassador program, actually, this is the one new program which we started. We are targeting 2,500 customers this year. We recently contracted with the industry leading platforms, and we are also signing up the professional ambassadors. So in Q2 and Q3, this is the one platform where we expect a very healthy growth and also new customer acquisitions. Next slide, please. Now, in terms of registrations, so what we are doing actually, we are making a lot of changes for customer-centric solution. So low friction interactions. Any customers who is coming to our platforms, they don't want to talk quite a lot for a long time. So we are making their first time landing experience so easy. At the same time, the chat and email service which we are giving to them is, we recently started also some chat service in India as well. And we are slowly actually making it so impactful for 24 hours chat facility for the customers, and AI bots also, and customer forums. So customer forum actually is one of the very strong tool where customer can give their feedback, and our team actually is able to react on those feedbacks very fast. Product. Now this is in Webex and personalized jewelry, we are going very aggressively. We are one of the few companies right now, we have done our research that personalized jewelry can become a very huge segment for our company. And because of our vertical integration model and our agile nature, we can really start giving this particular range to customers with a very short lead time and at a very affordable price. So this is the one area which probably can give us a very good new customer acquisitions, and also the story platform actually at our company at a very high level. On marketing side, digital marketing, we are taking a lot of different initiatives in terms of acquiring customers. Recently, we hired one outside new agencies, and we are seeing actually our cost per customer acquisitions against that. We are seeing a fair amount of progress in that area. We're also starting loyalty and warranty programs. So this is the one program actually where customers can actually sign up for the warranty for a product for 6 months, and later on we can expand it further. We introduced initially on the marketplace. Now we are taking it to our main business as well. And we are fairly confident actually this particular initiatives will give us a lot of customers which will get a confidence for our products. Affiliate marketing and gift card is one of the another initiatives which we are taking very aggressively in terms of getting new customer acquisitions. Price and value. Faster and free shipping is one of our key initiatives this year. As we are seeing right now during the pandemic time, a lot of customers were looking for the fast delivery for the mask. We were one of the few companies in the US where we have taken the decisions of shipping the mask on the same day. And that is really being appreciated by customers quite a lot. And what we have seen, a lot of customers recommended our platforms to other customers, and we have seen very healthy new customer acquisition growth. At the same time, we're also giving free shipping on the online platforms, and also we are giving value bundle shipping on TV, which is attracting also a lot of new customers recently. Lower ASP. We always would like to maintain our average selling price, which is around doing well. Having also, we still monitor the customer demand, and if they ask for the higher price point products, we do offer in certain segments, but we still try to keep our ASP within the reasons and lower than competitions. At the same time, our returns facility to the customers, although we say 30 days money back guarantee, but we don't ask many questions to the customers, and we provide a constant, very easy facility for customers to return the item. And also we are thinking even to make it this particular process much better for customers in coming weeks. Dipti, can you go? Now, this is the one area for the customer's experience point of view, retentions, where we are seeing quick shipping, easy returns, and online self-service. So we recently starting the online self-service also, where customers can actually print their own return labels, and also they can put their queries where they will get the answer straight away. Warranty, appraisal, and repair programs. These are three major initiatives which we will be taking it for this year. And we believe that this is going to increase the customer experience at a very different level, because a lot of high street jewelers and some of the companies, they will not be able to offer such kind of programs because of the no vertical integration model. Reaching out to existing customer, our consistent dormant campaign. So customer actually who are not shopping with us anymore because of some different reasons, we are constantly, our marketing team is driving at different dormant campaigns based on the customer feedback and analysis and analytical tools, which Jay mentioned earlier. And also we are doing segmentation based marketing campaign as well. Engagement through CSR. This is the one area which is actually very powerful for our companies, where constantly we are engaging our customers in our CSR activities, but at the same time also continuous reminder of customer contributions. Because everything built to the school is a very engaging message. At the same time, customers really believe into that. Environmental responsibility, that is something which we are going very aggressively this year. And as a company, we are actually very serious about going for recyclable packaging, but at the same time, options for customers to go paperless invoicing. So our IT team is working very aggressively on the directions, and we believe that we can actually really help the environment by taking these initiatives. Customer testimonials. On-air live customer testimonials. This is the one feature actually where we really see a lot of customer, they share their feedback every single day. Like product like Shungite is the one stone, which is a healing gemstone. We have seen that customers have sent us thousands of customer reviews, and we are able to use those customer reviews on air every single day. And recently also, some of the customer volunteered were during the auctions and presentations as well, where they are ready to speak on air about their experience live on televisions. Treasure Hunt, which is a branded closeout box, branded closeouts with Norel and innovative solution products. So Norel is one of the famous fragrance range, which is available at a very expensive price on the Amazon and some of the other platforms. But as a company, we are able to provide at a very reasonable price, and we have seen a good new customer acquisitions with this kind of treasure funds. Now, last is repeat purchase. So we have very robust platform where customer really shop. Like last year, customers was buying around 32.5 pieces at Shop LC every single year. Recently, with the new customer acquisitions, we have seen it has slightly gone down, but we constantly see our repeat purchase is very high, and we are adding a lot of new categories in US. So we have seen a strong growth of lifestyle like apparel, and now this year also we are adding shoes. We are expanding kitchen very aggressively, and also private label brands. Lower ASP. We are also optimizing our promotional calendar planning to maintain our low ASP. So we constantly review our calendars where we really believe that lower ASP actually is the right thing for us to do it, for constantly acquire the new customers, and also keeping ourselves very strong against competitions. Engaging storytellings. So we are one of the few companies actually where we have remote broadcasts from different countries, where a lot of gemstone experts, lifestyle experts, beauty experts, we are actually constantly inviting them to present on our platforms through different countries, and that is doing very well. Brand development for loyalty. So we are increasing our private label brands because brand actually give a lot of stickiness to the company. And this is the one area where actually as a company, we are going very aggressively, and our team is working with the brand attributes, and we are expanding our brands, private label brands, both in jewelry and lifestyle segments. Rapport between host and guest host. So we see actually customers really follow certain host and guest hosts. And we see that also we keep our show very engaging, where a lot of customers can even they can send their pictures with the dog, or they can send pictures with their kids, and we show those pictures actually during our under $10 programmings, and that is very engaging platforms, and customers really appreciate it. And the last one, which is sticky model, live 365 24/7. That is our model. So in spite of pandemic also, as a company, we were able to continue our platforms 24/7 without any interruptions. And at the same time, we constantly give bargain deals and also a lot of educational content, because we provide the customers. So if you are selling some of the beauty hobo products, we give a lot of educational content to the customers. And also on our website, we have educational section where customer can go and learn about gemstone, beauty, and different products as well. So this is all from Shop LC side. If you have any queries, then we will answer it during our Q&A sessions. Thank you. Deepti, back to you.
Would now like to invite Shrikant to take through the UK operations.
Thank you very much, Deepti, and welcome to the UK business. And Deepti, you can go to the next slide. So our revenue has been growing consistently. As you can see that for the last 3 to 4 years, it has been going at about 20%, 19 to 20% range. And this last quarter, our business grew at 32% overall. Over the last 5 years, you can also see our web sales has grown from 13% of overall revenue to now in the last quarter to 30%. Our goal is to take it to about 50% in the next 3 years. So team is think that in the coming years. Profit, you may put your. Okay, thank you very much. So our profit number has been growing as well in a very robust manner, and last year our profit grew to £6.4 million, which was 41% over the previous year. And this year, in the first quarter, we grew at 67% to £1.9 million. So really robust profit trend, and we expect to continue the business in the same way as well. Next, DP. This is just one important number that we follow internally, and we wanted to bring it to your attention as well. So when we compare ourselves to some of the big online retailers or digital players, so without taking the name of the player, one of the most well-known UK digital company, and we saw their number of repeat purchases that customers make with them over a period of 1 year. It was 4 for them, and it is about 18 for TJC. So what we are trying to say here that the model that we have is very sticky, as Amit also mentioned. Customers, they continue to come back multiple times, almost 4.5 to 5 times more compared to a regular digital business. So, and we expect this will continue in the same way as we continue to grow the business. Next, Deepti. Now, talking about the customers that we have, and we are going to talk about 3 different set of customers. So one is represented by Donna. So Donna is a 68-year-old lady. She is retired. She has grandkids. She follows trends. She is not a trendsetter, but she follows. She shops for herself and for her family. She is a very value-conscious lady, and because she is retired, she's sitting at home. She's looking for companion. She wants some company, so she is watching us on TV, and she thinks of our studio as extension of her living room, and she engages with our presenters in a way that they are their friends and family. So she interacts a lot with them. So she's our typical TV customer. When we talk about Wendy, Wendy is a working mom. She's 38-year-old. Because she is a working mom, she has kids, she has expenses of education, she's investing on future. So she has to make a lot of smart choices. And she's also, because she's going out, she's going with her friends, she's going to work, she wants to be on trend, but she also seeks approval from her friends. So she is engaging with them on social media. She's one of our typical web customer who is on social media, who talks with her friends and family, but is very value conscious. And the third set of customer is represented by Sandra, who is 54 years old. She's very hardworking. She still works, and she's an empty nester. Her kids have gone out to either school or college, or they're working, and so she's now free. She has a lot of time, so she's spending time on watching us on TV. She's also interacting us through social media. She's also buying through website. She wants to stand out because she follows her kids on social media. So she wants her kids to feel think of her like her friend as well. So she likes to embellish her with new fashion, new jewelry, and new products. So she's also a trend follower, but more of she buys more to stand out, to really stand out to her kids. So she's an omni-channel customer that we have. And we'll show you more about their spending habits in the next slide. So Deepti, can we go to the next slide? So overall, when you look at the lifetime value of our customer, overall lifetime value of the customer is £548, and they normally spend on they normally buy on an average 26 quantity per year, which our overall customer base has gone up by 22% over last 1 year. Our TV customer, which is represented by Donna, their lifetime value is £751, and they buy about 31 pieces on an average per year. And the number of customer in that pool has gone up by 7%. Web customer, which is represented by Wendy, their lifetime value is £129. The quantity they buy is about 11 per year, and we've seen about 49% increase in the customers in that category. And omni-channel customer, which is customer that is represented by Sandra, their lifetime value is about £3,900, 66 quantity per customer per year, and 19% increase in that pool. So we are really seeing good increase in overall customer base, but omni-channel customer is definitely one of the most valuable and is leading the way for growth for TJC. Next, Deepti. So now we'll talk about omni-channel customer experience, how TJC provides the omni-channel customer experience to our customers. So what we do is we are available on different platforms where customers can watch us, they can shop with us, they can engage with us. So we are present on TV, the linear TV with 25 million household reach, including 17 million that is OTA, which is over the air free view. They don't have to pay anything. Anyone can get that connection at their home. Second is our web, which is our proprietary e-commerce website, tjc.co.uk, which is built on a very robust Salesforce Commerce Cloud platform. Apps, we are available on the mobile and tablet devices through our app, and we are upgrading the technology and the experience to improve the overall customer experience on the app. Streaming TV, we are available on most of the major streaming providers like Roku, Apple TV, Amazon Fire, Samsung, Facebook Live, YouTube, and many more. Marketplace, we are selling and acquiring customers through multiple big marketplaces like Amazon, eBay, Frugo. Frugo is a UK-based marketplace, really growing very fast. And we have plans to add more marketplace in our assortment in the quarter as well. And social media, of course, this is one of the area that every company is focusing on a lot. But we are, from our side, we are investing heavily on social media, interacting and engaging with our customers on Facebook, Instagram, YouTube, etc. Next, Deepti. Now, as I talked about, that our goal is to increase the omni-channel customers a lot in the coming years to grow our digital business. So these are some of the strategic initiatives that we are taking for digital expansion. So number one is our digital customer acquisition. We are focusing heavily on acquiring customers through digital channels, and I'll talk more about it in the next slide. Then the second one is free and fast shipping. We are seeing that with Amazon launching their Prime program about 6-7 years back, they have really changed the industry and customer behavior in terms of what they expect and how they expect to receive the product. So in UK, we are already delivering customers their product fast, but we want to go even faster. So we are focusing a lot on our operations, on our shipping partnership to reach our customers faster, and we'll talk more about it in the coming slides as well. Social video commerce, which Amit also talked about as social DR, but it's more of doing infomercial style product focused video commerce, which we are also focusing on, and we'll talk about in the coming slides as well. Then we have web exclusive merchandising. This is an area of a big opportunity for us. We are investing heavily on bringing collections that are traditional, seasonal, and personalized to engage with our customers and give them products that they're looking on digital space. And last but not the least is a TT and video outreach to ensure that videos we reach our audience in all the different channels that they consume the videos from. So whether they consume the video through social media or OTT device or their phone or their tablet, we want to be there, and we are working very aggressively to get there. Next, Deepti. So these are some of the just a brief detail about our digital customer acquisition initiatives that we have. So first one is influencer program, and Amit talked about it as well. So there are two different initiatives that we are taking. One is to convert our customers into influencers, for which we have partnered with a leading company in this space, technology partner called Pixely. We launched this program in April of 2020, and we are encouraging our customers heavily to post about us on social media and share and tag us. And we're seeing good improvements in the good growth in this area till now. We're also reaching out to influencers, targeting those influencers with 2,000 to 30,000 followers, demographics of 25 years to 50 years. And our target is to bring about 200 influencers a month to TJC platform. Ambassador program is this is a program where anyone can become a TJC ambassador, and they can promote our product to their friends, their families, their fans, and they'll get a commission. Right now, we are offering 10% commission of the sales that is generated by their post. We've partnered very recently with a company called TV Page, and we're seeing good interaction with that, but we're still working on enhancing this program because we see that there is going to be a lot of leg in this program in the future. And then, of course, we are heavily investing in the traditional digital marketing, which includes the affiliate program with Rakuten Linkshare, with Google and Bing search and display ads, remarketing, Google Shopping, SEO, email program, etc. So a lot of effort is going on increasing our customer base through digital channels. Next, Deepti. Now, the second big initiative that we have, as I talked about, was free and fast shipping. So one of the initiatives that we are taking is we are launching a loyalty program for TJC, which will be called TJC Plus. Our team is currently working on building the technology, and we will be launching this in Q3. What this will do is this will allow customers to be part of our loyalty program, pay a small fee per month, and they will be eligible to take free shipping, unlimited free shipping on the products offered by us. Our numbers show that we will be able to get to about 70% of the packages shipped free within 3 years through this loyalty program. On fast shipping, our goal is to deliver about 90% of our orders within 48 to 72 hours of customers ordering them. And this is an area where we started focusing about 6 months back. We've already seen really good growth. Actually, it has come up to from May. It was about 25% in May that we were delivering between 48 to 70 2 hours, and recently we are touching close to about 60%. Our goal is to get to about 90 in Q3. Then the third initiative, as I talked about earlier, is the social video commerce. And this is a product-focused video commerce via social media to generate sales and acquire new customers for our omni-channel platform. This is a program that our US channel has already launched, and they're seeing very good attraction on this. So we are also building the team right now. Our plan is to launch it this month. We've already recruited a person to lead this for us, and we already have a lot of people in our team who knows how to create these kind of videos. So we're very excited about doing this program for us and grow the business in the coming months. Next, Deepti. And these are just some of the lines that we are bringing for our web exclusive merchandising. So as I mentioned earlier, that our focus is to bring products that would appeal to the customers that are coming from digital space. So charms is a big market in digital space. We are focusing on that. There's Zodiac jewelry that we'll be focusing on. We are also focusing on bringing an exclusive wedding and engagement line of jewelry. We're working on remembrance and memorial jewelry. We're working on initials and birthstone jewelry. And we've also recently launched a collection of children jewelry, which is also getting a lot of traction on digital space. Next, Deepti. One of the biggest area that we see for growth in digital space is personalized jewelry. And so we are also building our technology. We are also building products and marketing and branding for personalized jewelry, where people will be able to buy something. They'll be able to personalize it with their name, their friends and family's name, or messages that they want to put on their jewelry to give it as a gift to their friends and family. So we're working on that. We're launching it very soon in the next quarter. And then we are also working on a personalized wedding ring program, where we'll be offering a wide range of diamonds and gemstones to customers that they can choose from. They can also choose the setting that they want to use, and then they will be able to order the jewelry that we will custom make for them and provide to them at the best price possible. So these are just some of the initiatives that we are taking. But as I mentioned earlier, we are very confident of growing the digital business in the years to come, with many more initiatives that are in the pipeline. That is all from my side. Deepti, back to you.
Thank you, Shrikant. I would now like to invite our Group CFO, Mr. Vineet Ganeriwala, to take us through the financial performance. In a sense of time, and to also have adequate time for the attendees to ask questions, we will try to close our presentation in a few minutes now.
Tripti, I'll try to be as brief as possible. Most of these numbers are in public domain, so I guess they would already be seen by most of the people viewing out here. Move on to the next slide, Dipti. So our revenue growth have been quite robust in the last few years. If you see the CAGR, our revenue have been growing at 11.7%. B2C in this space was even better. It was close to 14% CAGR in the last 4 years. Overall, we are encouraged by these numbers, which reflect success of some of the strategies which Sunil, Amit and Shrikant were mentioning a few minutes before. It represents the success of those over the last few years. We are, in particular, like Q1 is more heartening, as it is normally a subdued season, and also it was on the backdrop of the widespread impact of COVID pandemic. While TV is increasing at a rate of 8.4% in the last 4 years, web is growing at a much faster rate, close to 30%. While we'll continue to report these numbers separately, it is important to note that both platforms are continuously converging to form a symbiotic omni-channel ecosystem, along with several other emerging sales channels, which Shrikant and Amit just mentioned. Next slide, Dipti. Our strong innovation-led product development ability and our deep discounting model is validated in this slide. For TV home shopping, we have been able to maintain our average selling price between $25 to $30 across the last few years. Over the years, we have launched and developed and expanded our categories, but we have been able to maintain our price and value positioning. Within accelerated growth of web is also backed by strong volume growth, and average selling prices there also have been quite stable in the last few years. So this continued volume and value growth is a reflection of our steadily growing consumer trend spotting, as well as continuously new product development and ever evolving product mix. Next slide, Dipti. We have been able to maintain our gross margins at 60% or more, which is sacrosanct and which is entry criteria for any product before it gets a position in our platform. Over a period of years, we have expanded our categories. From fashion jewelry, we sell almost 36% of non-jewelry products across various lifestyle categories, but we have been able to maintain our gross margin levels. And we expect to see this trend going forward as well. Our beauty of our model is like the cost below the gross margins are more or less stable. So when we increase revenue over a fixed or a stable kind of a cross base, we see operating leverage, which is reflected in the EBITDA margins, which are expanded over the period from 6% in FY16 to almost 14% in FY20. Similar expansion can also be seen in PAT, and which is also leading to the continuously increasing EPS numbers over the last few years. Next slide, Dipti. So fixed is stable. The jump in FY20 is largely because of the reclassification of leases required by the accounting standards. Shareholder equity is a reflection of the PAT and the share capital. In FY20, important is to note that we distributed almost 100%, very close to 100% of our PAT. Because of the strong cash flow generation, net debt is continuously increasing. So it's negative net debt of about 279 crore as at the end of Q1 FY21. Also, important is to note that the net assets have also been quite steady over the last 3 years. So the jump in FY16 to FY18 was because of the expanding budget pay, which Amit and Shrikant also touched upon. In the last few years, the working capital have been quite robust. Both inventory and debtors are being managed efficiently, and hence a stable kind of a net asset scenario can be seen. Next, Dipti. Operating cash flow is quite healthy. The cost rebase program, which also Sunil touched upon, operating leverage and a robust working capital management is giving us strong operating cash flows in the last few years, which can be seen out here. So 200 kind of a cash flow, operating cash flow in the last 2 years. Also, the delta between the operating cash flow and free cash flow is very less because of the less capital intensive nature of our business. So our routine maintenance capex is not huge, and hence most of the operating cash flow also flows down to the free cash flow, which was close to 180 crores in the last 2 years. And the Q1 in FY21 sees the same elevated level of operating cash flow and the free cash flow numbers. Next, Dipti. Like I just mentioned, so our capex requirement is not huge, and the revenues and operating leverage have been quite healthy. This is also getting reflected out here in terms of improving financial ratios. So ROE have improved from 12% in FY16 to 26% in Q1 FY21. What's more heartening is the ROCE, which has jumped from 13% in FY16 to almost touching 50% in Q1 FY21. The operating leverage, low capex, and the ever-increasing net debt because of the strong cash sitting on the balance sheet is what is driving these ROCs, and we expect it to continuously increase going forward as well. Next slide, Dipti. So we have in place our dividend distribution policy, wherein we intend to distribute 20 to 30% of our consolidated free cash flow, and we can even look at higher payout in special circumstances. In line with that, the board recommended for Q1 FY21 a 5 rupee per share interim dividend. If you look at FY20, including the dividend and the buyback, we distributed almost 100% of our free cash flow and PAT for that year. Our strong performance is sitting on the bedrock of strong governance. So KPMG are statutory auditors for 3 years now, and we recently also appointed Deloitte as our internal auditor in this year. So next slide, Dipti. So that's all from my side. Handing over back to Sunil for taking us through the strategic priorities.
Thank you. So I will skip some of the slides in the interest of time. Let's go to the way forward. Yeah, Tim. So key takeaways for the meet today. Next slide. So our business model is very unique. As I mentioned earlier in my presentation, there is no parallel to our business model except perhaps Zara, which is brick and mortar and web combined. So our model creates a huge moat around our business for any competitor coming. Customer engagement is exceptional, not only from the business point of view, but from the community service point of view. Our one-for-one model is very unique and has high engagement from customers and many partners as well. Technology platform is robust at reasonable cost. We have good team in place. Jay joined us last year with 20 years of experience in US of working for other digital retailers. And he's assembling a very capable and robust team to take our business to much higher level. Our management and governance, as already Vineet spoke about governance, we are very high level of governance across the entire organization. Our management, as I mentioned earlier, we have a management development program that started 18 years ago and continues to this day. In fact, taking the advantage of COVID scenario in India, we have hired very capable management graduates from many different institutes and some with a lot of experience and very capable. Our both brands, Shop LC and TJC, are very robust, and we have multiple sub brands under our umbrella brands of Shop LC and TJC, and there's a lot of aspiration around those brands in the customer's mind. Our omnichannel sales platform, television, web, marketplaces, social DR, mobile, we are everywhere the customer is or going to be. And the OTT, for example, is going to be, and we are there. So we want to be there at wherever our customer goes to be part of her life. Next slide. All the stakeholders are important for us, and we pay equal attention, and they are part of our balanced scorecard. So customers, as you will see from Shop LC, A+ rating at Better Business Bureau, we have the highest rating possible. From TJC has 97% positive rating on Revu. That is a platform which customers give feedback directly, and then we rate their they rate for our product on that platform. Employees, we are rated by employees, which is independently generated assessment by Great Place to Work all over the world. So they assess all our 4 business units. And actually, they assess all 6 units. And the China unit, since Thailand and Indonesia are smaller units, they're clubbed together with China units themselves. So China has received Great Place to Work certification, India has received, and UK has received. And we are hopeful that US will receive it in coming years soon. From investor point of view, good payback, and constant communication, transparent communication, and having a high level of governance. From environment point of view, we are 45% of our energy is already renewable in India. We expect to get it to 100% within a year. All our India factories and energy needs will be 100% renewable. All our plastic across the globe is largely recycled, but we are going towards 100% recycling pretty soon. From society, we believe that we are we are in the forefront of this initiative of giving back to society through our one-for-one program. And we have many other programs within the US and UK as well, but they are not to the level, to those high level, but we do have them in place as well. With that, I want to open the forum for Q&A. Dipti?
So we will give it a minute for the question queue to assemble.
In the meantime, we can put the slide of our targets.
Yes. We take the first question from the line of Nirav Mehta. Nirav Mehta, I have unmuted you. Please go ahead.
Yeah, hi. I hope you guys can hear me. So Sunil and team, hi, this is Nirav, and thank you so much for doing this very extensive presentation. So really appreciate it. So the question I had was just on the target segment, and I know for some time our target customers been a white middle-aged lady in the US or UK, so to say. Do you see this as a strategic priority to kind of make this target segment a little wider, maybe go into the 30s and 20s or late 20s for women, maybe appeal to men as well, and kind of widen our target segment base at all?
I'll take that question. So, Nirav, thank you for your question. Our target is largely baby boomers and Gen X because they are the target audience with largest disposable income. And our merchandise also is largely targeted towards them. And it's a very large population. So these two demographic combined are large. I don't have exact number, but they constitute more than 60% of disposable income in America. So we want to target, and we stay focused in these two segments.
Got it. And sorry, just a follow up on that, Sunil. I understand that now our social media presence, etc., is being built. Do you see that as a area of improvement? Because when I look at, let's say, our Instagram account of Shop LC, I see some 5,000 odd kind of followers, whereas someone like QVC has more than 600,000 followers. So is this something that you guys are thinking about spending time on? And I mean, is this something which is a strategic priority again in terms of channels?
That is true. Nirav, very good observation. As I mentioned in my last earning call, that we are focusing on this area. We already stood up a very capable team to address this segment. And we are seeing, as Amit also mentioned in his presentation, that we are seeing good traction in this space. Earlier, what we used to do about 5 years, 6 years ago, we bought likes from Facebook. But that didn't really translate into customer buying. So we have 600,000 likes on Facebook, but didn't make any difference for the business. So now we've stood up a team that goes with the presentation of a product and with a small clips, video clips on both this platform, about 30-second clips to 1-minute clips, and that is gaining a lot of traction. And we're very excited, and I think I see a lot of growth coming from that space. Although our growth potential in our existing space is still very large, when you said QVC does $60 per home, our revenue is only $3 per home. So there's large growth potential in an existing platform of TV and web itself, but social is the largest potential for us.
Sure. Thanks, Sunil.
Thanks, Nirav.
So next question is from the line of Mr. Lakshmi Narayanan. Please go ahead. Also, if you can share your institution that you represent, that will help.
This is Helen from Lakshmi Narayan from ICSA Prudential. Thanks for this good presentation. One quick observation is that when I look at the number of employees from FY17 to FY20, it was around 3,800 employees in FY17. Now it has come to 3,400, right? Just want to know how many employees are actually based in India and what kind of salaries you pay for them, and how does it work, globally, and why the reduction in employees?
So I'll answer that question. So I'll go first question. So I'll start with US. US is approximately 500 employees.
Sorry?
US has approximately 500 employees, and UK approximately 180 employees. Now the numbers move because of contract workers. For example, call centers are contracted out. Earlier, US used to have our own contact center, and we outsourced a large portion of that into multiple centers between Mexico, Guatemala, outsourced within US, and recently in Philippines. In UK, we have earlier customer service was completely in-house. We outsourced partially to an outsourced call center. In India, the number would fluctuate based on the contract employees and full-time employees. So I don't have exact number from US, and our HR head could not join because of Shraddh today. But then that information can be shared with you in due course.
Got it. No, I mean, is it fair to assume that around 2,500 employees are there in India?
Approximately.
Or even more?
That is correct. So it may be more than 2,500. After pandemic, about 300 and some odd employees did not turn up. They left for their native places, but our productivity has actually gone up after pandemic because some of the workers actually, we felt that we were overemployed.
And so you would pay around 1.5 lakhs or so per employee in India.
I don't have that number, Mr. Lakshmi Narayan.
Got it.
It will have to be given later by Pushpendra.
I just want to understand, what is the right way to think about it, and because you also mentioned that outsourcing is also there. So, I just want to understand how labor intensive is Indian operations, and how do you look at US? Do you actually have a mix of contract? Just to understand that part, because the difference is quite huge between your standalone and consolidated when your employees is heavily in India.
Yeah, so as I mentioned, US is approximately 500 employees, full-time and part-time, and UK about 180 employees. They are the largest population outside of India. China is about 120, and Thailand and Indonesia just about 20 each. So they're not very large population. Our philosophy from manpower point of view is that earlier we were contracting a lot of work out to the other players, but as we have seen recently, training and coaching employees and developing and progressing them through the organization is actually a differentiator for us. So as year goes, we will be bringing more and more in-house and creating the larger pool of people to develop from. I don't know if I've answered your question, Mr. Lakshmi Narayan.
Mr. Lakshmi Narayan, we've lost your voice.
Yeah. No, I'm able to listen. There has been some network issue. Now I can listen.
I hope I've answered your question.
Yeah, I got your questions. I answered. Thank you so much.
Okay, thank you.
We have the next question from the line of Kanwalpreet. Please go ahead. Kanwalpreet Singh from Ambit Capital. We will come back to you again. Seems like there's some network issue at your end. The next question is from the line of Pritesh Chheda from Lucky Securities. Please go ahead, Pritesh.
Yeah, hello, sir. Thank you for the elaborate presentation. One question from the slides. We have highlighted the omni-channel lifetime value of the customer. So the omni-channel customer as a percentage of our total 4,25,000 customers that we have would be what percentage? And is it fair to assume that a lot of the incremental growth is going to be from the web and the omni-channel?
Pritesh, thanks for your question. I don't have the broken down number, absolute number with me here in the presentation, but the growth we look at is comprehensive. So we are acquiring customers from television and digital properties, from all the even marketplaces transitioning to our main business, which is mostly e-com, social media. Also, they are transitioning to the main business. But what we are trying to do is TV customer, we are trying to transition to web and web customer over to television as much as we can, because the value of omnichannel customer is substantially more than either platform. So our aim is to, all the effort, our marketing, our messaging is to transition to omnichannel platform.
And when I was looking at the omnichannel customer, so there the pieces bought is, just give the
value is substantially higher.
Yeah. So how is that? Yeah. So how is that calculation actually derived?
So we know customers who buy from our multiple channel, more than one channel, and if they do, then we take out the total number of pieces bought and total customers who are omnichannel, and we divide by that by the value. So right now I don't have the pieces count here, but the value was given to you, and the lifetime value is the gross margin we make from the lifetime of that customer. So first of all, the lifetime of the customer is longer. The typical lifetime of a customer is about 2 years. Omnichannel customer is much longer. I don't have exact number, but it's much longer than a normal either television or web customer. And the customer purchase behavior per year is also higher. So lifetime value is the margin that we derive out of the lifetime of that customer.
Okay. And from the cash flow utilization angle, so one is the budget pay. There, do we have a upper cap in terms of a percentage of business to be done via budget pay? Because that would utilize a part of our cash flows, and any direction or target there for the next 3-4 years. And second, considering the low capex nature of the business, the cash flow in the business is fairly robust. Yet the dividend payout policy pegged is at about 25 to 30%. So there, what are your thoughts, and what could be the possible utilization of cash flow?
Yeah. So Vineet, you want to take the question, first one?
Sorry, yeah. Can you just repeat quickly? There was some disturbance in the.
Okay, so on the first question, considering the cash flow aspect, the possible utilization, one could be in the form of higher budget pay, which increases the cash utilization. Is there an upper cap in terms of what proportion of our business should come from budget pay? And second, considering the lower capex nature of the business, 25 to 30% payout is a fairly lower payout. Or do we have other thoughts on the utilization of the free cash flows?
Sure. So I'll answer the second one first. So 20 to 30% is the committed number as per the dividend policy, and we also mentioned that we'll look at the special circumstances, and if we don't have much efficient use of the cash, we might recommend a higher dividend to the board to consider. And last year we pretty much distributed the entire free cash flow. Coming to the nature of the business, so even the working capital is pretty much like robust and healthy in the last few years. Budget pay normally hovers around 35 to 40% of the entire revenue mix. We don't expect it to exponentially go higher, as this is related to the overall average selling price of the business. It is only offered to high priced items, and we intend to maintain our positioning in the deep value segment and maintain the average selling price. Hence, we expect the budget pay also to hover around this kind of a range only. And that's why I mentioned that working capital we don't expect too much cash to be stuck out there in times to come. Of course, some data and inventory would increase in line with the revenue mix, but pretty much that would be it.
Yes, so Pritesh, it is around 40% right now. So we expect it to be around between 40 to 45% of our sales will come from budget pay. And remember, budget pay, a first installment comes right away. And then the rest of the installment, they are between 3 to 5 installments. They come in 3 to 5 months.
And my last question is, as a group, from a medium-term perspective, let's say 3 to 5 years, do you see yourself largely doing these two geographies, or you would be actually seeding a new geography for a similar business model?
Yeah, I'll answer that. So we are constantly looking for opportunities, and if an opportunity presents, we'll definitely be interested into Germany and Japan as an additional markets.
Okay. Constantly looking for opportunity. So can it be a situation where you seed the market on a fresh basis, or?
Yeah, it is possible, but if you can get an existing opportunity, then that will be easier for the business.
Okay. Thank you very much, and all the best to you, sir. Thank you very much.
Thanks, Pritesh.
We have next question from the line of Mr. Bharat C. Shah. Bharat Shah, please go ahead.
Yeah, hi. Given the fact that we aim to keep unit price of our products rather low, around this $20-25 per billing, basically the growth will have to come from more and more customers, because if the unit price is unlikely to change much, then the growth has to come from the more number of customers to be acquired. Given the fact that we are basically in the business of budget jewelry at a lower end level and selling to certain kind of demographic profile, how large is the size of opportunity? How large this business can be? To what it has done so far is definitely significant, but how large the business can potentially be?
So I will answer that as a couple of examples. So when US market was predominantly served by Macy's or Bloomingdale's or likes in department store for apparel, and they were selling higher price point brands, Inditex came to the market with similar product at similar clothes, not designer label, but similar clothes at lower price point. So their price point is around $50, whereas similar product will be a couple $100 into Macy's or Neiman Marcus. And the revenue of Inditex is approximately $25 billion today in that segment. And as I mentioned earlier, the Gen X and baby boomers is very large segment in US and UK. They have more than 60% of disposable income of these two geographies are within these two segments. Our opportunity is not only sell jewelry to them, but the accessories and fashion products as well to them. Even the home product, even the kitchen items. As you saw from presentation, that segment revenue has gone up pretty significantly over the years. Our opportunity also lies in acquiring more customers through different channels and then retaining more of those customers and selling more pieces to those customers through multi-product categories. As I mentioned into all my 4 R's. So reach, registrations, retention, and repeat. So our opportunity is very significant.
You said that Macy and Bloomingdale kind of a market is what, about $25 billion?
So no, just Inditex itself is $25 billion revenue.
Sorry, your voice is faint.
So Inditex, that is Zara. If you know Zara brand, the parent company is Spain-based Inditex. So their revenue is in excess to $25 billion just in low price point apparel and accessories. They have some home product too, but within those product categories, they're $25 billion.
And that Messi and Bloomingdale, you mentioned a number. Sorry, I couldn't hear that properly.
No, I did not mention their number, but within that product category, their numbers are much smaller than Inditex. And another example is Walmart. Walmart came in as a value purveyor and has become the largest retailer in America based on the value.
I see.
So there's a huge potential for us as a business.
Sure. No, I understand that you may expand geographies, you may expand distribution channels from TV to maybe web and to the social media. So that path is clear and more customers to be acquired. But when we want to expand through more and more product categories, isn't there a risk of a clutter? Because we may have a strength in understanding one area, two areas of opportunity, and understand the space well and design our offerings and tailor our distribution accordingly. But when we try to get into disparate, very wide different products from kitchen appliance to cheaper end jewelry to apparel to bags and to shoes and everything, isn't there a risk of a marketing clutter and creating uh, sort of unwieldy marketing organization? And in the risk, we may not comprehend our customers well.
So that's a very good question, Bharat Bhai. So to answer that, last I think about 8 years, our SKU base has ranged between 20,000 to 25,000 SKU. Even if today our non-jewelry segment is about 37% of our sales, our SKU number hasn't increased. Oh, sorry, design base hasn't increased. SKU is about 55,000. That means each design may have multiple color, multiple ring size, or multiple bracelet size, or multiple handbag or bedsheet size. But our design element has not gone beyond 25,000. And our aim is to keep that number constant, to keep below 25,000 designs in our business. So if you bring in a new design, some old design has to fall off. It is controlled by two areas. One is if it is on television, there is a limited airtime. So we can't present more than that space. So it is limited. Second thing is web. Web can have more items, but in order to keep our ROC and ROE in control, our overall inventory is very much focused. We can't exceed the number of days of inventory by any business. So with that keeps a discipline of number of SKUs in the business. So any new item coming in has to earn its space to expand, or a new category has to earn its space to expand. And if it does, something else has to fall off because of the inventory level constraints that we have in the business.
Sure. Can I ask one last question, if I'm permitted?
Sure, please go ahead.
Okay. So I understand that you want to keep the overall portfolio of SKUs tight. Variants can be more, but per se, unique number of products will be limited to about the 25,000. So that's as far as the portfolio pruning and keeping it in a tight shape is concerned. But when we venture into more and more product categories, each product category has its own nuances, its own economics, and we need to comprehend that business and its marketing appeal and its relevance to our customer segment. I mean, the three kind of customers that you narrated both for your US and UK, they may have applicability for maybe fashion goods, accessories, for cheaper jewelry. But when we get into kitchen appliances and more other product categories, will the marketing finesse, understanding all of that will work in the same way? Because there is a risk of confusion in the mind when we try to do too much.
So there is a possibility if we did not have constraints in place. So each category or each product within that category has to earn its space, whether on the website or on television. If it doesn't earn its space, it is discarded pretty quickly. And we have mechanism, the rising auction that Amit mentioned and with Jay also mentioned, that mechanism is there to exit any dogs or tails very quickly from the system. And so we make a mistake. I'm sure we make a lot of mistakes in product selection, but that mistake is already baked into the numbers, and that is exited out of the system pretty quickly. And an item which is not really worth even on the rising auction doesn't go, we donate that item out to Goodwill or to Salvation Army, and we learn from that. So we have very fast learning organization and learn from our mistake and numbers. And our analytics is pretty strong, so constant learning is there.
Sure, much appreciated. Thank you.
Thank you, Vaibhav.
Thank you. We have our next question from the line of Pulkit Singhal from Motilal Oswal. Pulkit, please go ahead with your question.
Yeah, hi. Good morning and good evening to the team, wherever they're located, and congrats on a good set of performance so far. And thanks for the analyst meet. My first question is, firstly, in the US, where are we currently on delivery charges and the time it takes to deliver the jewelry and non-jewelry categories? If you could share.
Amit, please go ahead.
So in US, we charge delivery charge on TV is 2.99 for jewelry items, and for lifestyle items we charge between $3.99 to $6.99 mostly. Recently we started right now, so customers are still paying the unlimited shipping charges depending on how many pieces they are buying it. But in last 1.5 months, since 7th July, we made the change where our customers can buy as many pieces as they want it and pay $29.99 shipping charges maximum in a day. So they can buy 40 pieces, 50 pieces also. But on the website, if any customers go and buy any order which is over $49.99 and up, it's a free shipping. And average customers in US right now, all the marketplace customers, we are shipping the orders with 2 days shipping timeline. Once we ship the items, it reaches to the customers in 2 days time. Recently also we started shipping all the high-end items, which are actually also we are shipping the 2 days service, but still our main delivery right now is still between 5 to 7 days is going to the customers. Having said that also, we are still talking to the different companies, but we are trying to make our delivery services more like in line of 3 to 4 days, going from 7 days right now in coming months.
Right, so that's what my follow-up question was. So in 3 years' time, where could we see the delivery charge and the delivery time for your business?
Yeah, so regarding delivery charge, actually, recently, as a company levels, right now we are changing at Shopalsi in 3 years' time, or not even 3 years' time, actually, within October right now, we are planning to bring it down from $49 to again to even by at least 15% less delivery charges. Our long-term goal actually is to go on website completely towards more like a free shipping. On TV, we'll slowly reduce it because shipping is still a big portion of the revenue. So we are slowly reviewing our numbers. As our number grows and our product mix gets better, I think we are definitely going to reduce our TV day cap as well, more towards like under $10 maximum for the day. They can buy as many pieces as they want it. Sunil can further add his views about it.
Delivery times as well. I mean, are we in 3 years, do you think it can be something like a next day or a 2 days, or do you think the way the supply chain is, you can never, that's very difficult to achieve with the business model?
That is in our discussions right now. We recently had big meetings with both DHL and UPS. Our aim actually is to go very close to 24 to 48 hours. We don't know right now. So far, we are not successful in getting and convincing the companies to go for that format. But I think in near future, with the 3PL service, where we will be putting our warehouse in different part of the US, it's still possible that we will start covering a lot of areas in 2 days to 1 day timeline. But right now, we don't have any fixed timeline for that.
Second question is, how do you really benchmark your TV content quality and website shopping experience? I mean, this is broadly, Sunil can also answer if he, I mean, this is very subjective, right? How do you know that you're producing good quality enough to attract customers in terms of production and the website experience in shopping?
So we constantly look at VOC, voice of customer data. So we approximately 20 to 25,000 customer feedback comes to us every month. And we have AI-based routing system for all the data that coming in from about 18 different channels. And all that data is routed to respective units, respective verticals. If it is the studio, then information goes to the studio manager. If it is website, goes to the IT and e-com, warehouse, service, customer service, call center, product, merchandising. All different areas are getting the data, and they are looking at the data very constantly and improving their services against ourselves of yesterday. And other thing we match against is the CSAT score, customer satisfaction score, and NPS, Net Promoter Score. So those numbers are constantly tracked on a weekly. So CSAT is tracked on weekly basis, and Net Promoter Score is done on a quarterly basis. And all different area, all the feedback coming in is looked at very, very closely, both in US and UK. So we constantly reinvent and upgrade ourselves.
So where would we be in terms of, say, the content quality versus, say, a QVC or Evine or wherever the industry standard is? Where are we right now, in your own opinion?
I think from QVC, we're pretty close to them. We are not completely there yet, but we are pretty close to them. From website, we are also getting there. We are not fully there. That's my estimate. My team, I'm not asked their opinion on this one, but that's my estimate that we are fairly close, but still not at QVC or at Amazon level. But we are getting there too. As you saw in this presentation, we are changing our platform in US. UK is already there in Salesforce Commerce Cloud. And UK is at QVC level. US is not there yet. But I think we will get there by, February or March of next year when we'll transit to Salesforce Commerce Cloud.
My last and final question is, I was just wondering what the rationale is for spending on a loyalty program when anyways you have a very high set of loyal customers who are buying a lot from you. And there really are not too many alternates. So it just seems you will just end up providing more value to those certain set of customers who buy 80% of the time. So do you think that money could be better utilized?
So that is very true for today, but may not be true for tomorrow. So we'll test the program. We won't give it open access to everybody. We'll test the program, see how much traction we have more. Does repeat purchase goes higher? At what level does it make business sense? And if it continue to make sense, we'll continue to go towards it.
Got it. Great. Thank you and all the best.
Thank you, Pulkit.
Thank you, Pulkit. Before we move to the next question, request those who already asked their questions and would like to move out of the question queue to please lower their hands. The next question is from the line of Mr. Milind Karmakar from Dalal and Roja. Milind, please go ahead with your question.
Hi, thank you for an excellent presentation. I'm looking at the company for the first time, so pardon me if my questions sound basic. My first question was that you're predominantly into jewelry and accessory, and it's fashion business. So the focus has to be on design. So just wanted to understand how we manage this attribute, because jewelry and accessories both are, the main focus has to be on design. So that was my first question.
Yeah, so let me answer that. So we were supplier to all the TV shopping and digital shopping companies. We are supplying to Amazon, QVC, HSN, UK, US, even Japan, Germany. So that's our basic understanding of business came from. And even Walmart and all the other big retailers, brick and mortar retailers like Signet in UK, US, they were our major customers. So we understood the business from that. And our product development team, trend spotting team is all designed or have groomed from last 25, 30, 40 years. Actually, I started business in 1980, so it's 41 years. So all that understanding of business has come from all that across organization. But today, the trend spotting, merchandising, product development, product sampling is about 300 people team. And that constantly develops new product all the time. On an average day, we bring 100 new products a day, every day, into our system. And there is constantly churn to see which is good product, which is not, that gets systemed out through our rising auction, through our clearance sections, and which is good gets expanded into larger category. And it's that process is unique for our company. That is a moat for our company actually. Nobody else has this kind of process except I would say Inditex. I'm sure there may be other retailers that we do not know of, but in our visibility, there are not many companies with this robust product induction process and churning that out without increasing the inventory. As you would have seen, our capital employed, our inventory is pretty constant for our business, growing very rapidly.
Yeah.
So that business model is very robust, and we are very proud and feel that they're very difficult to breach that moat.
Okay. My second question was that we talked about using influencers, micro influencers to basically be on the social media. So just wanted to understand, how do we reward the influencers?
Amit, you want to answer?
Yes. So every single influencer right now, which initially when they sign up for each post, they get $100 from us. They were getting an earlier $200, but we changed it to $100. And on top of it, also we offer them 5% commission on the revenue. And that now we are setting the system now, so they'll be getting the checks every week. And there are two influencers already. They signed up for 30% of their time with ShopLC.
Okay. So my last question is that India also is a growing economy, though I know that we are still at $2,000 per capita. Any thoughts on starting operations in India as well?
Yeah, we looked at Indian economics and we feel that India, from the logistics and credit card penetration, the return rates, it does not make a business, it is not profitable. And I don't expect this industry, long distance shopping, to be profitable for another 3-4 years or maybe longer. So we don't want to come into country. Our model is very robust, value-based model. And I believe that we can come into India at a later date and still make profit. But it's too early for us.
Okay. Thank you. Thank you very much.
Thank you, Milind. We have the next question from the line of Gautami Desai from Chanakya Capital Services. Gautami, please go ahead with your question.
Thanks for the opportunity. The question is, have you done, I understand your customer profile in terms of age group and so whatever you explained, but have you done some kind of a study on what is the economic segment, typical economic segment that you cater to? Like, how, like in India, we have like a lower middle class or upper middle class or SEC A, B, C, something of that sort. That is my first question. And the second question is that do you in-house manufacture everything that you sell, all your accessories and everything?
I'll answer that. So our customer is a middle class to upper middle class. Average income is $55,000 to $60,000 in US. I don't have exact data in UK, but that is in the US, and I believe the demographics in UK would be very similar. Second part of your question about what we manufacture and what we outsource. So approximately by value, a little more than 50% of product is manufactured by us. Jewelry, largely, lifestyle largely is outsourced. We recently set up a factory in Jaipur for manufacturing garments, apparels, and some the bedding material. So there is a small factory, but as we learn that space, we'll expand that further. So when we see scale of a business and we see economics of value addition to our business, we will go into further backward integration. But till the time we understand the business and we don't see economic scale, we won't go into manufacturing ourselves.
Gautami, we are not able to hear you.
Yeah, yeah. Thank you very much.
Thank you, Gautami.
Hello, can you hear me?
Yes, Gautami. We have the next question from the line of Vikrant Kashyap. Vikrant, please go ahead with your question.
Good evening, Sunil, and thank you for this kind presentation. I have just a couple of questions. In post-COVID, we have seen rapid growth in the acquisition of our customer base. Do we that demonstrate that we have a market where it may be due to COVID situation, but we have a lot of customers, and do we see this kind of growth to sustain, and what are the strategic priorities for you to maintain this kind of growth?
Thank you for the question, Vikrant. This is true that during COVID, starting in April, our new customer acquisition, our business growth has been quite elevated. And we are continuing to see the growth now. But we do not know if this growth will sustain in the long run. So that's why we are being conservative and giving still our pre-pandemic guidance of 15 to 17%. This may or may not, Vikrant. So we can't give guidance right now. We are only giving 15 to 17% overall business guidance and 25 to 30% of digital growth guidance for mid-year, so 2 to 3 year timeline.
So Sunil, my question is not on the revenue front. My question is on customer acquisition, because we have been lagging around 3.5 lakh for many time, and suddenly we jumped to about 4.5. So I think the customer behavior has changed, and that's present a lot of opportunity for us. So I am trying to understand your strategic priorities on that front. I understand this is elevated number, but still I see potential for growth. So where do you see this number?
So definitely, Vikrant, there is a potential for growth, and we are working really hard. First of all, to convert our essential customer to the main business, and also acquire more and more new customer at elevated pace. So we're continuing that even now. But will it continue after pandemic? We don't know. So we're putting some strategies in place in the business that Amit and Shrikant shared with you, all the strategies that they're going to put. And will that continue the long-term growth? Still, we don't know. That's why we can't give that guidance at this time. Because you know what, the pandemic is so new. Nobody knows. It's unprecedented. So giving any guidance based on this kind of unprecedented situation would be risky, and we don't want to give any guidance that we can't keep or exceed.
Okay, got your point. One more question. You are coming up with your loyalty program. Do you think it will help in increasing our retention rate of customers? Do you think any sign of that by implementing loyalty program?
So that is true.
And if
sorry, please continue.
I was asking if you can share what is our unique customer number right now.
Yeah, so unique customer, Deepti, if you can look, or we can look as of last quarter, they can give the number. But
it's about 425.
So we can give only last quarter wise, but I can give you guidance that our unique customer is still elevated even the current times, and we suspect that this will continue at the elevated level as long as the pandemic continues. After that, we are not giving specific guidance.
And on the loyalty program?
About the loyalty program, we will continue to watch it, how it goes from the repeat purchase point of view. We expect the repeat purchase to increase because of the loyalty. There is no shipping cost, And we are also planning to give some additional incentive within loyalty program, so which will not cost a lot, but will have larger value for customer, like warranty program, other programs, which only we can do, other people can't because of a vertical model, only we can do. So these are unique positions we are trying to create for future, but we'll test them slowly with a small segment of customers, and if receives a much higher repeat purchase, then we'll roll it out to a larger audience. But these are futuristic thought process we have, and they'll sustain our company's growth for a long time to come.
Okay, thank you, Sunil, and wish you best of luck for you and team.
Thank you.
Thank you, Vikrant. We have the next question from the line of Chintan Chet from Samiksha Capital. Chintan, please go ahead with your question.
Yes, thanks, Dipti, for the opportunity. Great presentation, sir. Couple of questions. One on the supply chain side. If you can provide a bit more color on that front, because most of the presentation was driven towards our retail front. If you pointed out 50% of the value we source it from in-house manufacturing, and 50% outside. If you can provide how our sourcing subsidiaries work, and source, do they source from a particular set of vendors? How do we manage vendors, in our supply chain? That is one part of question. And second is on the margins. If from your initial remark and our investments in influencers, ambassadors, and other stuffs, do we see any increased cost per se in our margins, and how do we look at it? And related to margin, if I can squeeze one, our gross margin in Q1 has been, pretty healthy, despite a 15% mix in the essential side. So just if you can elaborate how we were able to, deliver that margins.
Yeah, sure. Good questions. So supply chain point of view, we have 3 units in Asia, which are outsourced based, and 1 unit is manufacturing, that is India. So we look at the product whenever the supply chain, whenever we want to go into a new product category, we look at that. Is it what we can manufacture profitably and economically? If not, then we give it outsource. And if the volume of that outsourced product goes to a certain level that will make business sense for us to manufacture, then we bring it in house. For example, we recently did with some apparel like caftans and some bed sheet, so all that product. But we look at the product before we start. We don't just go out and place the orders just like that. But we look at the category and then do it. For example, perfume, I don't think we'll ever manufacture at this time. We don't have the visibility. Or the beauty product, we probably always go outside to source of beauty products. But house product or the kitchen product, we may manufacture down the road once our volumes are supporting to that scale. We look at the vendors from their capability, how they've serviced us. We check the references, and then we test them with this experience. If the vendor is economical, is that direct manufacturer, we don't buy anything from middlemen. Unless it is a brand representative of a beauty brand, we would not buy from middlemen. So we look at the manufacturer, we look at the infrastructure, we look at the factory, we inspect the factory before we place the orders, and we take the references. And if everything is checked out, we'll place the order. And for repeated orders, they have to consistently perform from quality point of view, from value point of view, from product performance point of view. The next question was about margin. So every product, we start with 60% margin. If a product will not give group margin of 60%, we don't go into that at all. So, and some product may give 70% margin too, but most of the product would be 60 and plus. Some product end up below 60 also. For example, if a product didn't do well, we sold a lot through clearance or through the online auction model, it may go below 60% too. But blended, we end up above 60% across the group.
On the influencer costs and our endeavor to further increase our presence in the marketplace, whether it will hit our EBITDA margin going forward. Should we expect any pressure on the EBITDA margin side?
No, actually, all the influencer or social or marketplaces, they're designed in a way not to be dilutive. So initial years, when marketplaces was launched about 3 years ago, so it was dilutive, but to a limited extent. But in second year, it was break even, and this year, standalone marketplace is profitable and decently profitable. And similar to social. So social, it may be flat, in first 12 months, it may be break even or slightly profitable, but it's not substantial. So it's all baked into our business plans when we go into these new product segments or new marketing segments.
So because commissions and you talked about 5% and 10% commissions to ambassadors and influencers that are kind of a bit high, and plus we are paying them upfront $100, something like that, in the initial for registration per se. So I was just calculating the numbers. You're targeting around 2,500 customers from them on an average. ASPs and purchase of 30 quantities we have. That number, comes to a sizable number, and the commission goes higher. So I'm just going in line, actually.
Yeah. So $100 is per post, not per customer. So
okay.
If influencer would post 100, they charge $100, and from that post we want 0 customer, or we may get 100 customers.
Mm-hmm.
Who the influencer is, what the post is, what the product is, how the post has been designed. So we are learning, and also the influencers are learning about our company. So it's still a learning phase, but our guidance of leverage, EBITDA leverage, is still stays true for midterm, 2 to 3 years time frame.
Sure. That's all from my end. Thank you.
Sure.
Thank you, Chintan. We have the next question from the line of Mr. Lakshmi Narayanan. Please.
Thanks again. So a couple of things. One is that if I look at your cash in the balance sheet, right, it is actually kept in, I think, in US dollar denominated thing, right? And I just want to understand what is your treasury policy of keeping cash? Do you want to keep it in the US, or you would actually bring it in India? How do you optimally take the decision? That is first question. Second question is that in terms of your inventory, right? There's definitely inventory pilferage, or it could be inventory obsolescence, etc. How do you actually manage it? And the third question is that if I look at your manufacturing and direct cost, has actually been coming down from 71 crores to almost 65 crores, whereas your admin and selling cost, which you call out, has actually gone up from 529 crores to 604 crores in the last 4 years. So how does one take in terms of what is the direct conversion cost? If you actually, because bulk of it is variable, and you also alluded to the employee cost sitting in the in conference calls, or not in the call centers, etc. Right? So these are the three questions from me, sir.
So I'll take this, Sunil. So the first question was about the cash. So we keep the cash at the earning locations, unless, of course, the subsidiary would declare some dividend for the parent company. We would also like to keep some cash in US, so that if any meaningful opportunity comes our way, we also have the resources out there to grab that. Right now, our treasury or the investment policy is we keep safety as the first and paramount thing. So most of that is invested in safe bonds and bank deposit, I think, across all locations. So whatever surplus cash we have across different locations, the investment would be only in very safe bonds and the bank deposit kind of a thing.
And between international and India, how much you would keep in INR and how much in non-INR in treasury? What is the policy?
So, like I mentioned, so it would depend on the dividend declaration, and we would want to maintain some cash right now in US, particularly because of any acquisitions, potential acquisition opportunity, if something meaningful comes our way. If you look at the overall quantum, maybe approximately 90% of our like treasury cash would be might be sitting out there at this point of time, outside India, I mean, across all geographies put together. In coming to your second question about inventory, so we have a very robust mechanism of exiting our inventory. So we have clearance, which we keep on doing from time to time, like any physical retail shop. So we have our clearance on TV and web. Plus, Amit, Jay, and Shekhar mentioned about the RA rising auction, which is also a very efficient tool of exiting any long tail inventories which might have remained after it is put on TV. So even if something remains after all this exit mechanism, we keep on looking at that and looking at the valuations and keep on providing them, providing it downwards from time to time. We do that every quarter, and the number you see in gross margins and inventory are after any provisioning requirement which might be there.
And what has been the this kind of provisioning or the loss over the last 4 years? How it has trended?
So this exit mechanism works beautifully for us, and the provision, absolute provisioning which needs to be drawn, like which we need to draw down our inventory, is not significantly high. Along with the disposable, like donation kind of a mechanism or inventory provisioning mechanism, maybe on a quarter, like it's difficult to make an average for 4 years in a quarter, maybe 200,000 kind of a dollar is maybe what we can look at if we see across last few quarters for that matter. But again, it's difficult to put a number to it.
No, as an organization, you'd be tracking it closely, right? Because that is something. It's a lost. It directly hits your bottom line. So
Yes,
is that a number? Yeah.
Yes. So if we look at an average kind of a thing, maybe 200K kind of a dollar per quarter might be something which might be we might be doing across last many quarters. Coming to the last part of the question in terms of manufacturing cost versus selling and admin, again, that's a fairly representation of the kind of the product which is being sold, which is being pulled by the customer, which is own manufactured or procured from outside. So it would be a factor of all these things. Of course, a large part, like we were mentioning, also in-house to outsource also have happened during this period. Overall, maybe to summarize, the gross margin level of 60% is something which is sacrosanct, and we have been able to maintain come what may in terms of product categories or manufacturing scenario. And also operating leverage, taking into account all the cost, also is something which we keep on seeing in the last few years, and we expect to see in future as well.
And what percentage of your admin and selling is actually variable, and how much is fixed?
Our admin and selling would also include all this digital promotion expenditure, which would vary from time to time depending on the kind of a promotion we want to do, and of course the kind of a pull which we are getting from that. In terms of absolute variable to units being sold or revenue, I don't think so. It's directly linked to that. So most of what that would be stable or fixed kind of a number.
So to call it out, you spent around 604 crores, under admin and selling expenses in the consolidated, right? Is it how much would be variable in that? I mean, definitely packaging, etc., content broadcasting, etc., variable. I mean, I don't know, semi-variable or not. So
I'll take that question. So, Mr. Lakshminarayan,
yeah.
So our fixed cost is airtime is largely fixed. Our staff is staff administration and studio staff is largely fixed, but the warehouse, the call centers, and the video content, the SKU development, that may be variable based on the category that we bring in. So the warehouse and call center is number of calls or number of pieces, and the content is team is depending on the product category that we introduce. So larger categories need larger number of people. Manufacturing also number of pieces or sourcing or quality by number of pieces derived. So from manpower point of view, I would say from dollar point of view, high value are largely fixed, but the lower cost, the hourly employees are variable. Airtime is largely fixed, but the marketing cost, for example, money going to marketplaces or social DR, that will be variable on the revenue side. So I don't have an exact ratio of that, but this will give you a large segments, what is fixed and what is variable.
Sunil, just to add on that, approximately 40% of such expenditures which Sunil was mentioning is kind of a pure variable in terms of shipping, call center, and those kind of costs. The rest is largely stable, semi-variable kind of nature.
All right. Thank you so much.
Thank you.
Thank you. We have the next question from the line of, we have Sudha as the displayed name, but I'm going to unmute you. And if you can please introduce yourself.
Good morning and good evening. I'm Shankar, individual investor. Is it audible? Hello?
Yes,
Yes, please go ahead. We can hear you.
Yeah, actually, I'm Shankar, individual investor. I'm having few questions. The first one is, do we see, due to current economic situation, do we see any purchasing power both the customers in jewelry segment?
Yeah, so I'll answer that. So at the pandemic time, during the initial 3-4 months, we are seeing a lot of essentials and little lesser of jewelry. But last couple of months, actually, we have seen jewelry picking up quite robustly, both in US and UK. So we are not seeing any of those the recession impact on our product line.
Okay, and from 1st of August onwards, the jobless claim, that amount is stopped. Do we see any impact on that?
No, we have not seen any impact on our business. So we are continuing, as I mentioned earlier, we are continuing at the elevated level that we have been ever since the pandemic started.
Okay, how our competitors are doing, like HSN, QVC, and JTV and all?
So JTV, I don't have the numbers, but Curate, they reported, I think, 7% growth. I don't remember. Maybe do you have that number?
I think 8.5, if I remember the number correctly, for the quarter.
So they reported 8.5% growth, whereas we reported in constant currency basis, I think 27%, was it Q1?
So ours in constant currency, it was 24%.
Okay, and regarding this eBay, we are getting each product, whatever we sold, are we getting feedback from eBay, or is it different, sir?
So we get feedback from about 18 different channels. That includes eBay, Amazon, our own review site, our forums, our call center, customer service, texts, email to the studios, through Better Business Bureaus, through Google Trust Score, through our Narvar shipping. So we get 18 or 19 channels are there. We get all the feedback, and then we take that feedback on board to improve our product and our service to the customer.
My question is, in omni-channel, whatever we are talking, eBay, we are getting very good customer responses, and in Amazon or Wish.com, even I'm talking about in both ShopLC US eBay as well as CJC UK eBay also, both we are getting a good response, whereas in Amazon and Wish.com, we are not getting that much. What is the reason? Is it because of we can promote in eBay and other channels we could not able to promote? Is the reason or some other?
I understand your question now. So we are seeing similar robust response from Amazon and Walmart as well. Wish is still very small. Even the new platform we recently launched called Overstock.com. So that also we are seeing very good response. So overall, as a business, last year we did about $4 million on marketplace between US and UK combined. This year our run rate is about $12 million. So although it's still a small number for our business overall, but this will give you an idea that our product is able to compete against millions of other manufacturers or sellers and gain market share rapidly.
What was my, sorry to interrupt, what was my observation is eBay on an average around 1,700 to 2,000 feedback, whereas in Amazon we are getting only 100 to 200. So is it really customers are purchasing in Amazon and they are not giving feedback? Is it like that? In that way I'm asking.
I do not know about the feedback. That is a very good observation. I highly appreciate your keen observations. I'll have to check more on this one. But from a revenue point of view, Amazon growth has been actually slightly higher than eBay from my memory. I don't have exact numbers right now, but Amazon growth has been pretty robust. Maybe there's another channel of feedback coming to us. I'll look into that.
Okay. Do we have any plan like HSN is operating 3-4 YouTube channels, whereas we are operating only one? Is it? Are we going different feeds we are going to give in YouTube? Or and one more observation was in YouTube. If you go your competitor channel, if you want to scroll backwards to 1 hour, you can see. But some few days it has come, but afterwards it has stopped. Now only we can watch live. Do we see any this thing?
So good questions. So one thing is about multiple channels. So that discussion have been held, but we believe that our channel has a lot of runway in front of us. So once we get to the point that runway slows down, then we will definitely go to the next channel. And then also, to be able to go to the next channel, our product portfolio has to be very robust into non-jewelry segment. So as we develop, understand that segment, we may get into that. Second thing is about going backward into our programming. So we are improving our offering of going back into 7 days. And so we'll continue to expand that to 30 days as the time comes. We'll continue to do that.
And last question, sir. Regarding you were saying that jewelry, the sales have not come down. Do we see, earlier we used to do Tanzanite program. There the piece value is more than, it maybe we can say the $400, $500, whatever it may be. Those type of products are moving, or it is less than $100 products are moving. I'm talking about even our average price point is 20 to 30. My question is in the jewelry segment, are we selling more on high-end products or low-end products? Because you told that now there is no problem in jewelry sales.
So our average price point in jewelry compared to last year is pretty constant. So in current quarter, last quarter was anomaly. Current quarter ASP of jewelry is similar to last year's ASP. Same Q2.
Okay. Thank you, sir. Thanks.
Thank you, Mr. Shankar.
Thank you. And that was the last question for the day. I will now hand over the forum to Sunil for his closing comments.
So thank you very much to all the participants. It was amazing participation by everybody. Thank you for your time and patience while we have gone through our presentation. It was a rather long presentation, but you stood with us, and thank you for that. And thanks for your continued confidence in Vaibhav Global. If you have any further question, feel free to reach Dipti Yadava or to CDR for any question, and we'll be happy to answer. Thank you and goodbye.
Thank you. And with that, we close the session for today.